So let's go back to the website for a little bit. So when it comes to the home, it's very self-explanatory, because you can just see what they're about, which is redefining wealth. You can see that they have all this fund management. Their services is fund management, wealth advisory, family offices and trust. That is estate planning. If you want estate planning services, it's possible for you. You also have corporate finance. So some corporates or some businesses usually have money aside for investment. This is the home for you. So you have portfolio optimization, investor profiling, market mastery, market mastery. So the simple step to get services is register via the portal that I've just shown you. Invest in a wealth service that suits you. It could be whatever fund that you want, and enjoy and monitor your wealth from home, because you have a dashboard. All you have to do is just look at how much you've earned every month. So the aim of the company is to just make investing simple and effective for you, and the team is personalized advice and straightforward approach that can help you achieve your financial goal faster. Okay, so payment option, you can see you can do M-Pesa, or you can do the major bank that will be responding to you will be NCBA. You can do a bank deposit or M-Pesa. You can subscribe into the email list. Very straightforward stuff. About us, that one is we have already gone through about us. We've gone through just looking who is in the company and what are their history, so that you know who you're investing with. Our funds is all the funds that are available, and this is something we're going to look at just right now. Family offices is when you want to set up a trust or estate planning services. This is where you are able to get it done. Then you have the calculator. These are the calculators that calculate your returns in every fund that you choose, which you're going to use later. So right now, I want us to focus on Avo funds and the calculator, so that you know how it all works. Let's demystify this so that you have better understanding. So the first thing you're going to look at is as you can see here, when you look at Avo funds, the funds in Arvocap are divided into 5 categories. That is money market funds, equity funds, Sharia funds, dollar funds, and fixed income funds. So let's start with dollar funds. So the dollar funds include the Arvocap Multi-Strategy Special Fund and Arvocap Eurofix Fixed Income Special Fund. So don't get confused, but you can see since it's a dollar fund, the minimum amount of investment is USD $1,000, and USD $1,000. So if you come back here, where is it? It's here. We have the Eurofix fund. So if you look at the Eurofix fund, you can see it's denominated in dollar fixed income. So this is a kind of fund that will only invest in the fixed market of the United States, the dollar fixed income fund. So the investment objective is to generate significant dollar income and achieve long-term absolute capital growth by investing in high quality sovereign dollar denominated bonds such as euro bonds and dollar corporate bonds and structured products. It will mostly focus on dollar based investments. That could be on a global perspective or internal perspective. So you can see risk reward profile. The fund is rated category 4 due to its exposure to volatile fixed income product and associated risk. Risk include fluctuating asset prices, changes in asset risk ratings, payment delays or default, exposure to macroeconomic factors, and difficulty in liquidating asset quickly. So why invest in Avocap Eurofix fixed income special fund? You get diversification. As you can see, they're investing in the USD corporate bonds, Euro bonds, fixed income that are USD based. You have stable income generation. you have potential for capital growth, and you mitigate risk. Through risk analysis and compliance monitoring, ensure prudent management and mitigating of risk. So this is something you can see. Minimum investment is 1,000, minimum top up monthly is $1,000, and lock-in period is in 6 months. Lock-in period means you cannot remove your money or extract your money until 6 months withholding period is realized. But they advise that you should be able to hold in for at least 3 years. So if you want to look at further details about the fund, you have to look at this investor document. You click just right here and it opens the PDF. And this key investor information document allows you to know more about the fund, which includes the objective, the policy, the risk reward profile. You get to know the charges, which include which you get to know the charges, which includes the entry charge, 0.5 initial fee, exit charge, there's no exit charge, fund management fee, 2% of the asset under management, and you also get to experience the performance fee that you're going to pay once your returns are realized. Also, past performance, you need to understand how the fund has been performing, and you need to also practical information, which custodian bank is the NCBA, the trustees, all that. You can see the fund is authorized in Kenya and regulated by the Kenya Capital Markets Authority. Yeah, so these are the type of things you need. Every fund should be able to provide you with such details. So once you have that, you already know what you're getting yourself into and you can make the decision. Another fund is the Arvocap Multi-Strategy Special Fund, which you can just come back here and look for it, which is also a dollar fund. So in this, we're going to see the multi-asset strategy fund. What does it invest in? What is the objective? How does it work? So you can see investors have the opportunity to deploy capital and participate in global themes such as commodity bonds, you can interest rates evolution, strategic industrial sector, emerging markets such as crypto. So this is where your fund will be used to invest in global markets. Okay, so you can see their approach, their risk and reward profile, why you should invest. Minimum investment is $1,000, minimum top up 1,000, lock-in period 6 months, and over here you also get the key investor information document to learn more about the asset. So now that is out of the way, so Arvocap has this dollar fund. Yeah, so just right there we have completed the dollar fund. We are done with the dollar fund. So let's look at the fixed income funds. So when it comes to fixed income, you can see these are the options. You have Arvocap Massive Fixed Income, Ngao. So let's go through. There are just two of them, and then Ngao is subdivided. So let's go through them. So the Arvocap Massive Fund, the bid offer is 1.19, 1.119, or $1.126, per unit. The lowest amount of investment is 100,000 Kenya shillings. So you click here to view it, and we can see about it. Are you an active investor but want your activity restricted on the fixed income market? Are you looking for an alpha return on your fixed income portfolio? They call it alpha return because Almasi is designed to accumulate. Okay, so it's designed to compound. So we're going to check that later when you calculate what that means. So note that down. It's alpha return because it's about accumulation. Frustrated that you can't sell your bonds as easily as you bought them? Do you want to increase liquidity in your fixed income portfolio? I imagine your wealth growing steadily like a snowball rolling down a mountain. You can check this out. So this is just about its compounding qualities. Investment objectives: to achieve capital appreciation through investment in fixed income asset, primarily in Kenya government securities, and qualifying corporate fixed income products. Actually, you need to stick around my channels, because I'm going to post a full course on what investments in securities mean, and you're going to understand what this means. When they say Kenya government securities and qualifying corporate fixed income products, you're going to understand that. I'm going to put you on game on that, but I'm still in the process of recording, so stay tuned and you're going to receive that. To actively trade bonds to achieve return above the average bond yields. So this is very useful. If you want to go buy bonds directly, cool, you go buy bonds directly. There's nothing wrong with that, but you have to monitor the returns. You have to be able to, monitor the portfolio, know when to sell, know when to buy. But when you invest in this fund, it means there's a collective pool of money, and so far this year the return has been around 25% so far. So the range will always be like around 18 to 25% at least. So the minimum investment is 100k, minimum top up 100,000 Kenya shillings. The risk profile is low because bonds and corporate fixed income products are often low risk. Lock-in period 6 months, so you cannot withdraw your money until 6 months is over. At least, that's the minimum lock-in period. So let's say the return was 20%, and you withdrew your money after 6 months, which is 182 days. You're only going to receive a return of 10k. Sorry. Let's say you put your money in, the 6 months, you're going to receive a return of 10%. Let's say the annual return was 20%, but after 6 months, you went ahead and withdrew your money for whatever reason, your return will be just 10%. But if you leave your money in for the annual period, you're going to get the full annual return. That's something you need to understand. So if we go back and you click here to invest, you are able to see how much you're able available cash balance. Mine is 0 for now. I withdrew some money. So to top up cash balance, you're going to be able to put only 100k, nothing below that, and then you're allowed to top up, because this is an accumulation fund. So let's see, if you put 100k, how much are you going to get? To understand that information, you come here at the website, at the menu, you click calculators, and you have a special calculator just for the Almasi fund. Yeah, so amount invested, we say it's 100,000. So for this thing to work, you need to at least top up monthly, but you're going to do the difference. You're going to see the difference when you top up and when you don't top up. So let's say your initial investment is 100,000. Investment period, you need to leave this fund at least out before withdrawing. Leave it around for 3 years. That allows you to have like such a good capital that can take care of your bills and the very many things that you want to accomplish. So investment period, we put out 3 years. Injection frequency monthly, injection amount 1,000. Interest rate, let's say that here the market performed at 20%, because I told you the range is between 18 to 26%. So depending on the performance of the market fluctuates. All we do is the best we can. So you calculate. Once you calculate, you can see the first year you put out my bad, it's supposed to be 100,000. Sorry, injection amount per month is 100,000, not 1,000. So you can be able to see on your first investment, which was 100,000, you got an initial return of 20,000, 20% of 100,000. And then your injections, if you injected for like the rest of the year, you injected 1,100,000, which was 100,000 for 11 months. Injection interest, 20% of your injection interest was 110, right? So your gross interest becomes 110 plus this 20. The return from the first the return from the first deposit, and the return from monthly injections. You have 110 plus 20, which gives you 130,000. That's your return, total return that year. So withholding tax when you're withdrawing is 19%. 19,500 shillings. So at the end of it all, you will receive 110,500 that year. And your investment value, the capital, becomes 1,210,500,000. So it becomes this 100 plus this 110 plus this net interest to give you 1,310,500. So this is your total investment value. So you can withdraw this net interest and maintain the injection. So you can choose to withdraw the net interest and leave the investment value. So in this case, it would be 1,310,500K minus 110, right? So if you take this minus this, so that becomes your 1,310,500 minus 110,500. So this is your net interest. So if you subtract, you're going to remain with around 1 million. Let me do the math off my head. You're going to remain with 1,200,000, 200 and or 1,100,000 and something. That will be your investment capital moving on to the next year. But remember, we've said this money we're putting it we're letting it compound and become a lump sum for the next 3 years. So this become investment value that year. Yeah. So the next year that is your capital. 1,210,500. So lump sum interest, 20% of it is 262. You keep on injecting all year, monthly 100K, you have an injection of 1,200,000. Injection interest is 130K. Gross interest becomes 392,100 minus tax. You have 333. So this is your net interest for that year, and this is your investment value. So you take this, subtract this, you get your capital for the next year. Or if you don't want to withdraw anything, you take the whole amount, and that becomes the capital for your third year. So for your third year, you have this lump sum, you have the interest, 20% of this. You still have injections, 1,200,000. That's 100K for 12 months. The injection interest is 130. So 130 plus this interest, you have 698. You take off the tax. You have the interest. That year you'll receive 593,943, and your capital is 4,637,728. So you understand, this is how the compounding aspect of it is working out. If you just keep injecting 100K every month for the next 3 years, that will be your return, or that's the way the calculation is done. So let's say you can withdraw the net interest and live off it, pay your bills, but maintain the capital. Or you can just let the money sit there and grow, and you can have like a lump sum coming in annually that can actually, be there for you to do your various things. So investing is about holding. If you look at the great investors, it's about holding, not being worried that my money, I need to this. It's about discipline with money, which is not easy. We are okay. Maybe not all of us, but most people are coming from a lot of struggle. Most people are coming from a lot of mindset, fluctuation. So, as an investor, the most important thing is to work on your mindset so that you can have the tolerance to even hold and make more money without obsessing that money that you put somewhere. So that now, if you manage to raise your capital with your patience and dedication and discipline all the way to 4 million, this means you can always live up on an interest of around 500,000, which is a good thing, while maintaining your principal. So if you ever decide to sell the units with the principal, that's okay too. But it means this money is working for you. So let's say you put 100K and you just wanted to invest for 1 year and no monthly injection. So you're going to put 0. and the interest rate was 20%. Or let's say you just invested for 3 years again. No monthly injections, 20% return. So let's calculate. You can see the first year you have your lump sum 20%, 20k, no injections, minus tax, you have 17, your capital is 117. You round off the next year 20%, your return becomes 23,400, net interest 19, 136, 20%, 136. You see, so your net interest by the time your 3 years is coming in, your interest is 23,271, and your capital is 160, 161. That is without injections. You just left 100k and you moved on, or you didn't pay attention to it. When you come back after 3 years, your income would be 23k and your capital will be 160, 161.30. So that's how the Arvocap Almasi Fund works. Another thing you need to consider, you come here at the Avo Funds page, you click Almasi, and you have to look at the key investor document. And this is another thing that allows you to know about the investment comprehensively. Yeah, what it's about, initial fee, exit charges, fund management fee, performance fee. Now let's look at Ngao fixed income. So the fixed income are two. Remember that Almasi and Ngao. Ngao is more of a monthly distribution. It's not accumulating like Almasi. This fund is solely created to enable you to deal with your monthly, quarterly, semi-annually, or annual responsibilities. So if you have quarterly school fees, you have rent, you have insurance payments, all that stuff, licenses, all that, you can come and invest, or you can use this package to meet those goals. Remember, before investing, you need a goal. You need a goal, you need that vision. You just cannot invest because I was saying it. You need to know why you're doing this, because that's what will carry you when things get hard. Because also investing is a risky venture, and sometimes you go to understand, when you lose, you lose, when you gain, you gain. It's that's the life of it. So Avocap Gulf Fixed Income Fund is divided into Class A, monthly distribution. Annual lead is 16.5%, invest from 100k. So be the master of income streams. Build a financial shield to your loved ones through well-timed cash flow to meet your and your target needs. Our fixed income, delivers regular income streams at your own pace. So investment objectives is to achieve income distribution through investment primarily on still the government securities and fixed deposits. So the minimum top up is 100k, minimum investment is 100,000, lock-in still 6 months, risk profile is low. So fund management fee is 0.5, annual 1% management fee, and the fees are charged quarterly. Okay, so if you want to invest, you come here and you invest. So let's look at the calculator of how much money you're going to make when you invest at the Ngao fund. Although we also need to know that we have this monthly distribution, we have the quarterly, we have the semi-annual, and you have the annual distribution. Depending on when do you need your money, do you need it monthly, quarterly, semi-annually, or annually? So let's look at the calculator to see how much money you're going to make. We have the special Ngao calculator. So you invest 100,000 and you want to be able to withdraw your money to be paid out monthly, let's say, yeah. And your investment period is let's say you let it stay out for 1 year so that it accumulates to pay your bills, and the return, let's say 17%, and then you calculate. So this, you see, summarizing how much you're going to get the pay, in a year. So in a year you have this. This is the monthly distribution for a year: 1,416. Minus taxes is 1,204, and by that end of the year you'll have 114,000 return, and then the payout is distributed monthly because that's what you wanted. So in this case, let's say you put out, to make sense, if you want to pay your bills, 1,000 is not enough. So let's say you put out 1 million, or you put out 10 million. Let's say you put out 10 million, yeah, and monthly, you want to be paid out monthly. Investment period 1 year. You let it sit out for 1 year before you start getting paid. So that means that every month you'll be receiving 141K from your 10 million investment, and total, by the end of the year, it means you received 11,445,000. But every month at least you have 141,000 shillings to take care of your needs, or minus taxes you have 120 for 16 to take care of your needs, and you are able to have like a distribution of 11 million by the end of the year, which is your return, 17% of 10 million. So um this is how, so 11 17% return of 11 million, or which is a 17% return of your 10 million. It gets distributed monthly. So let's say you wanted to be paid, or you want to receive your money quarterly. It means quarterly you will be getting, every 3 months you'll be getting 425,000 minus tax, 261, and then at the end of the whole year you have 11,445, thousand, which is 17% gain for your 10 million. So this is how it's working out, and that's the Ngao. So if you have fees, you have payouts like payroll, such kind of investment, or holding your money somewhere like that, that means that money is working hard for you, because the principal remains. All you're living off, this is the interest that you're living off, but the principal remains. So if you ever decide to sell the units, you'll sell the whole 11 million and probably buy other units or do whatever you want to the money. But this is the money you're going to live off every year, and this becomes like your capital. After 17% of 10 million, this becomes like your capital. Now we're done with fixed income funds. Let's look at the equity funds. With the equity fund, we have Arvocap Money Equity, and Africa's Equity Special Fund, and Global Equity Fund. So let's look at all of them. The Tamani Fund, the Tamani Equity Funds focuses on Kenyan equities. That is the Safaricom, the banks. So to achieve above market risk adjusted returns through investing in high value, high liquid stocks tracked by the NSE, Nairobi Security Exchange 25 Index. So it will use derivative listed on the NSE for short-term plays of managed risks. Achieve capital accumulation by having mid to long-term view of equities delivering high returns and appropriately positioning itself. So this fund solely focuses on Kenyan equities that are listed by the Nairobi Security Exchange. Minimum investment 100,000, minimum top up 100,000, lock-in period 6 months. Risk profile high. Equities are high in risk and volatility, but we have a team. There's a team, a fund management team that are very qualified and equipped and experienced in this, so you don't have to worry. Fund management 0.5 initial fee for all new funds. 2.0% of AUM, 2.0% AUM per annum in management fees, and the fees are charged quarterly. Performance fees 20%. Yeah. So where the fund's aggregate performance for the period is negative, no performance fee is chargeable. The fees are charged annually. So this kind of fees, performance fee, you don't have to worry. Performance fee just means that, let's say we promised 15% return, for example, and we deliver 25%. We charge performance fee. But let's say we underperform and we promise 50%, we deliver 13%, there will be no annual fee to be charged. There'll be no performance fee. Performance fee only happens if the fund outperformed what it had initially promised or it had initially stated as the rate of return. So remember, Arvocap Tamani Equity Fund focuses on Kenyan equities, and minimum investment 100K and top up 100K. Okay. So this, we don't really promise on returns for this because the returns are always fluctuating, so it could range. But obviously, you're not going to receive anything less than 15% to 25% a year, depending on market performance. So we're going to now that we've checked after money, let's check Avocap Africa Equity Special Funds. Avocap Africa Equity Special Fund invests on African equities, so we can view it. Go beyond the ordinary and tap into the vibrant pulse of Africa's rising economies. Our Africa Equity Fund unlocks unparalleled opportunities, shielding you from volatile currency while seizing the potential for high returns. Forget stagnant markets. Join us in the dynamic landscape where growth is the norm, not the exception. Embrace diversification and witness your portfolio flourish with the rising stars of Africa. So this fund focuses on countries such as Kenya, obviously, South Africa, Egypt, Ethiopia, probably Nigeria, like all African funds, like all African equities, it could be their banks, their telecommunications, the companies that are performing well at their stock market. We tap into that. So you're not only going to invest in a Kenyan equity. Kenyan equities like Tamani, Avocap Africa Equity Special Fund focuses on Africa equities, African companies, various African companies that are performing well. In this fund, you're going to invest in Rand. So your money is going to be converted into the Rand currency, and the minimum investment is 15K Rand. ZAR, 10,000. Minimum top up is 10,000 Rand. Lock-in period, same thing, 6 months. Fund management fee, performance, and all that. So your money is just going to be converted into Rand so that you're able to invest in this fund. So it's obviously something to tap into if you want your money to collect income from various African companies. So another thing we're going to look at is the Global Equity Special Fund. So this Global Equity now is what invest in the Metas, the technology companies, the Teslas, the Apples, and all these good with Bath and Beyond, and all these stocks that are global and USD, or it could be from the UK. It doesn't matter. This fund focuses on equities from the rest of the world that's performing well. Minimum investment is 1,000 USD. Minimum top up 1,000 USD. Lock-in period 6 months, and this is the fund management details and the performance fees details. If you want to know more about the equity special fund, or if you're interested in investing in the equities, that's something we can actually talk about, and you can book a consultation so that will know where you fit in and where you can fit in to make money here. So we can book a consultation call. We can meet at the office, or if it's okay, we can just talk over the phone so I can guide you and tell you which fund you are able to benefit the most from, depending on your goals. And you're going to be in connection with experts in this, so you don't have to worry. If you want to know more, just comment or reach out via email. I'm going to put contacts so that you are able to know what it's about and what's the state of your money and the return and all that kind of stuff. So now that we've gone through that, let's go through the famous money market fund. Money market fund has been able to deliver 15 to 16% so far. You can check it out. It's money market fund is often like a cash management tool, because this allows you to just manage your money. When you put your money in the bank, you're not even going to get more than 9% return, and that is on a good day. Minus taxes, your best chance is 5%. But when you put your money in a money market where you're having like 15, 16, 14% return, you are able to keep your money safe, like from inflation. Because if the inflation rate is currently, let's say 13%, I think it's around 13% by the CBK. If it's not 13%, let me know in the comments. So if the inflation rate is 13% and the bank is giving you 9% or 5% or 4%, you see how that is depreciating your money. But when you put your money in this cash management tool, the money market, that gives you 15%, 14, 16, at least trying to be above the inflation rate, you're able to manage your money. And the best way you can use this tool is to use it as a savings account, because you can see most of the funds are just 100k and above. So meaning you can put your money here to let it accumulate, and then once you get to the 100k level, you can now choose a better fund. Now when you have better understanding and all that. So minimum investment is 3,000, minimum top up is 1,000. So you can just keep putting money here until your money accumulates, and then you can withdraw it and put it in one of the funds. So you can go here to invest now, and you can top up. You want to do bank deposit or M-Pesa, select account, let's say my account, and you are able to make secure payment or enter amount. Let's say I'm putting in 5,000, or let's say I'm putting in 50,000, and you can make secure payment. That's it. And then once you proceed, it will bring you the code, like your phone will ask you to put in the password or the pin, and then you're going to have the pin, and you're going to deposit your money. So if you come here and we want to see how much money we will save up, let's say our goal is to reach the 100k mark. You're coming here at the money market, amount invested. Let's say we're investing 10k. Investment period, you're planning will do 10k for the next 2 years. Injection will do monthly. Amount to inject, will always inject, let's say 5,000 shillings every month. Injection placement at start of every month, let's say, and the return, let's say it's 16. So when you calculate, you can see you have your initials and the injections, and we have net interest per month that is on your money. So by the end of 2 years, you have a capital of 145,000, and now you can take that and buy an Almasi fund or buy a Ngao fund, buy some units from Ngao, and get your money to work for you. This is money that you're making without doing anything. All you did was make a smart investment.